Today, we will talk about what a Canadian Guaranteed Investment Certificate, GIC, is. A Guaranteed Investment Certificate is a deposit investment sold by Canadian banks and trust companies. People often purchase them for retirement plans because they provide a low-risk fixed rate of return and are insured, to a degree, by the Canadian government. These are marketed in Canada in much the same way U.S. banks market certificates of deposit to their customers. In the United States, GICs are created and promoted by insurance companies and have a slightly different client focus. The GIC works much like a certificate of deposit in the U.S. In the case of GICs, you deposit money in the bank and earn interest on that money. The catch is, the money must be deposited for a fixed length of time, and interest rates vary according to how long that commitment is. When you buy a GIC, you are basically lending the bank money and getting paid interest in return for the favor. GICs are considered safe investments because the financial institutions that sell them are legally obligated to return investors' principal and interest. Even if the bank fails, investors are insured for up to $100,000 Canadian by the Canadian Deposit Insurance Corporation. A bank's profit is the difference between lending rates and the rates they pay on GICs. If mortgage rates are at 8% and GICs are at 5%, then that 3% difference is the bank's profit. GICs offer a return that is slightly higher than Treasury bills, making them an excellent option to diversify a stream of liquid, safe securities in a portfolio. As noted above, many Canadian banks and trust companies sell GICs. While a trust company does not own the assets of its customers, it may assume some legal obligation to take care of them. In these instances, trust companies act as fiduciaries, agents, or trustees on behalf of a person or business entity. Other forms of safe and income-producing securities are U.S. Treasury securities, including T-bills, T-notes, and T-bonds. GICs and U.S. government securities can be cornerstones of certain portfolio strategies, either those that rely on safe streams of income or as a base that balances out riskier investments such as growth stocks and derivatives. Here are two key takeaways. 1. A Guaranteed Investment Certificate, GIC, is an investment sold by Canadian financial institutions. 2. When buying a GIC, investors deposit money in the bank for a fixed length of time, receiving interest on that money and the principal when the investment matures. Hope this would help. Thanks for watching.